And I think inflation will go much higher than we are now. It may drop in the 6 months to 1 year, but I wouldn't be surprised if we had inflation of around 100% per annum. Wouldn't surprise me, and interest rates around 70%. So I want to have some gold, and I've been buying gold since 1985. That's when the gold price had collapsed. I started buying every month, and I buy every month. From time to time, I take larger positions.
Research shows that between 1974 and 2008, there were 8 years when U.S. inflation was considered high. During those periods, gold prices rose by an average of 14.9% yearly. The rate of return for gold investments fluctuated significantly from 2002 to 2023, but generated positive returns in most years of the observed period. Between January 1971 and March 2024, gold had an average annual return of 7.98%, which was only slightly behind the return of commodities, with an annual average of 8%. The annual average return of gold in 2023 was 13.1%. Marc Faber, publisher of the Gloom Boom Doom Report newsletter, predicts financial institutions are underexposed to gold, but rising inflation and money printing will push clients to demand its inclusion in portfolios. He foresees inflation reaching up to 100% annually and interest rates as high as 70%, making gold essential. Over the last 20 years, annual inflation has averaged 3% in the UK, according to the Office for National Statistics. Over the same period, the price of gold has increased by an average of 9% per year, according to the World Gold Council. Based on historical trends, Marc Faber's views on gold have remained unchanged for 40 years, noting that it remains a safe store. He highlights how gold, priced at $35 an ounce in 1970, is now around $2,500, proving its ability to preserve purchasing power better than cash. Despite his long-term gold buying strategy since 1985, Faber expresses disappointment in the performance of gold shares. Gold shares, relative to the S&P 500 and the price of gold, appear extremely undervalued. As gold prices have performed well recently, gold stocks have followed suit. Newmont Mining and Barrick Gold are up 54% and 26% respectively over the last 6 months. With interest rates forecasted to be cut several times over the next year, it could be the beginning for gold equities. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, my take on gold is the same as it was for the last 40 years, that in the long run, in a money printing environment, gold is not necessarily the best performing asset, but it's a relatively safe asset and it will maintain its purchasing power. Let's say if I look at the gold price in 1970, it was at $35 an ounce before the Nixon devaluation, and now it is at say around 2,500. So the price level has gone up between 1970 and today, but the gold price has, I think, to be fair, kept about its value, its purchasing power, better than cash. But I mean, I'm not saying we will have a boom in gold price, but I'm of the view that financial institutions, they're run by portfolio managers. The portfolio managers are all people, they went to Harvard and all these universities and Yale and so forth, and they are conditioned to own stocks and bonds. And if you look at the composition of assets by fund managers, their involvement in the gold market is tiny. It's like if you look at the component of oil and energy stocks within the S&P. At one stage in 1980, it was over 30% of the S&P was energy and energy related. Now, something like less than 5%. So there are some sectors that in the marketplace are underrepresented. And I think financial institutions one day, a fund manager will be asked by a client, look, do you own any gold? And he will say no. Then the fund client will say, well, are you mad? I mean, you can see that there's money printing and inflation accelerating. And I think inflation will go much higher than we are now. It may drop in the 6 months to 1 year. But I wouldn't be surprised if we had inflation of around 100% per annum. Wouldn't surprise me. And interest rates around 70%. So I want to have some gold. And I've been buying gold since 1985. That when the gold price had collapsed, I started buying every month, and I buy every month. from time to time I take larger positions. I also own some gold shares, but I have to say that the performance of gold shares up to now, it may change, but up to now has been an utter disaster. As I said, my major position is in physical gold, which I like the best because I don't like paper. We have to be aware when the big bubble will be deflated, paper will suffer more than physical. But I have to admit that gold shares compared to the S&P 500 and gold shares compared to the price of gold, ditto for silver, are incredibly low. So I own the shares because they appear to me to be incredibly low. But you asked me before what my view was, and I said to you, the gold shares have acted horribly. It's a complete disaster up to now. I may change. I hope it will change because I have quite a few of them. It's not, I don't depend on them going up, but basically gold shares have been incredibly disappointing. That is the fact.
Stocks have generally performed better than gold over the years, but there can be exceptions. Looking back 20 years, for example, gold has outperformed the S&P 500. Investing in stocks also carries risks. While many stocks have delivered substantial returns, others have seen their value plummet. A long list of stocks have posted triple-digit gains in the last few years. At the same time, others declined by 50%, and some even by more than 90%. Regarding the end of the recent asset inflation boom, Marc Faber explains that a broad decline in asset values could follow. He anticipates that while stock prices might drop by 30 to 50%, gold is unlikely to experience a significant surge, but should hold its value more effectively than other assets. Stocks have had a great year. However, gold is doing even better. The metal is up about 30% in the past year, compared to roughly 23% for the S&P 500. Gold's spot price sits above the $2,500 mark, slightly below an all-time high set before Labor Day. Let's get back to the interview.
I think we need to entertain the idea that if we have had this colossal asset inflation in the last 40 years, and if it has come to an end, the asset inflation, then everything can go down, but some things will go down more than others. So let's say if we make the assumption that stocks could drop 30 or 50% and we own gold and we expect that gold will go up, that may not be the case. The case may be that gold holds up relatively well, that when the stocks drop 50%, the gold price only drops 10%. So you are relatively becoming very wealthy if your assets only drop 10% and everybody else's assets drop 50%. You understand? We could be in an environment of asset deflation. It's possible. Or of asset deflation in real terms, inflation adjusted.
Yeah.
If that is the case, I have to say there's not many things that will go up, but there are things that will go down much less than others. And I don't think that Asia is dirt cheap yet, but some assets in Asia are cheap, like property stocks in Hong Kong, they're very low. And the economics of offices in Asia are slightly different than in the Western world, because we don't have the homeless problems and so forth. And living conditions in Asia, in major cities, are not particularly good. So people actually like to go to an office. They don't want to stay home with their wives or husbands or children the whole day. They want to go to an office. I also have my own office building. I have the house where my family lives next door. But I have an own office building. It's nicer to be alone when you work than having all kinds of trouble the whole day with the household. So the economics of office is slightly different here. And we have stock markets that have been going down for 10 years vis-a-vis the US, and they're relatively low. The same applies to European markets. They're relatively low. And some sectors of the market were cheap. They have started to outperform. Like in Europe, the insurance sector has done well. And in Asia, just recently, say, in the last months, Malaysia was up almost 10%. This year, Malaysia in dollar terms is up 20%. It's not bad. I mean, it's respectable. India economically is doing well. The valuations are very high. So what I'm interested in is the fundamentals, but the value is something bad, but the values are very depressed, and I may be interested to buy it. And if something is good, like India, but the values are expensive, I may not be interested to buy it.
Overall, gold has proven to be a smart investment this year. with the price of the precious metal rising steadily since the start of 2024. With the prospect of inflation and economic volatility on the horizon, could gold become a more critical asset in your investment strategy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.